What is up, everybody? Solomon here. Super excited to be with Genfinity, interviewing a multitude of builders across Web3. Tons of there's been waves that have been made out of the Algorand ecosystem recently with the Pera Immersve debit card. Let's see if I can navigate getting through this podcast while speaking. But super excited to have Joseph with us today from Pera Wallet and Jerome from Immersve. Always like to start these out with a little bit of an intro, overview, and background. Jerome, you're kind of our guest of honor today. We've never had you on. Tell us a little bit about yourself and an overview of your role within Immersve. That'd be great.
Yeah, cool. Thank you. So I've been in payments since the 90s. So very long time, probably show my age a little bit there. In Web3 payments since roughly 2017. I'm the founder and CEO at Immersve. And Immersve was set up to bring the best of Web2 and Web3 together. So we've got a partnership with Mastercard, which is called a principal membership. It's the highest status you can have. It's essentially the same relationship as major banks. So we were the first in the world to settle with Mastercard using, crypto, USDC. And the thing we like about working with Mastercard, obviously, is their acceptance network. You can spend at over 150 million places, and consumers also get protection. If they go to Nikes.com instead of Nike.com, then they can reverse that transaction, get their money back. So that's kind of cool. On the Web3 side, when we set the business up, what we wanted to do is to stay true to the values of Web3. So particularly around self-sovereignty, my identity, my data, my assets. How do we empower individuals to be the masters of their money? And so we came up with, an invention, an innovative way in which users could transact on-chain without trusting any third party, without a bank, without fiat, without an exchange, and they could seamlessly and in a very easy way, like they do with any other sort of card, tap their phone if they want on Apple or Google Pay, and spend on-chain everywhere Mastercard's accepted.
Yeah, it's huge. I mean, certainly abstracting away some of the complexities of using this technology and sticking to the ethos of Web3. Joseph, I would love if you could maybe give us an intro of yourself as well, your role within Pera, and kind of what the integration here means, and then we'll dive deep into some of the questions here.
Yeah, of course. I'm Joseph Scala. I'm the head of product and marketing over at Pera Wallet. We are the leading wallet on Algorand. We wanted to give our users a way to be able to spend the funds that they've been accruing on chain. Algorand and USDC we're very tight knit together. So having this ability to take your USDC, deposit it into a smart contract account, and show off the technology of Algorand while we're doing it, and give people a way to spend on their real life payments. It's just the way that we can make the. If you've never seen it, there was a commercial for Algorand where people are on checkout lines, and they showed comparisons of shopping with Bitcoin, shopping with Ethereum, and then shopping with Algorand, where our instant finality allows on-chain transactions and no issues for somebody being able to spend twice or any of that sort. So having this card feature is not only a showcase of the Algorand technology, but it allows us at Pera to give our clients the best user experience possible.
So I think we're kind of getting into the broader vision here a little bit, and I think that these are milestones that we've kind of just started to see over the past year and a half in Web3, and it's awesome to see the initiatives being brought into the Algorand ecosystem as well. I guess, one of the questions we always kind of come up with is, what benefits do these ecosystems bring to the table for different integrations? Maybe Joe or Jerome, if you want to kind of kick us off here, like when you think about the benefits of the Algorand ecosystem and tying initiatives like this into Immersve, what does Algorand kind of bring to the table?
Yeah, look, a couple of things. For the most part, and particularly when we started this project, a lot of the L1s were not capable of processing transactions sufficiently fast, reliably, and at the right price point to make that viable. So we had different workarounds of our funding protocol and mechanics to cater for different chains. And the thing with the Algorand implementation is it's a very decentralized version of our funding protocol and mechanics. The reason for that is it allows for permissionless withdrawals. In some of our funding protocols, you can spend. So we look after custodial partners as an example. So obviously, that's a different use case. We do have the ability to spend directly out of your EOA wallet, but for many of the chains on the L1s in particular, users have to deposit funds into the protocol. And the reason for that, and Ethereum is a good example, is it's not fast enough. You don't want to pay gas fees for every transaction. You get a higher number of declinations, or you'd run the risk of double spend. With Algorand, it's instant finality, it's speed. Basically, the implementation of our card funding protocol, each user has their own individual on-chain, basically bank account, right, where they can deposit their funds into. And other parties, if they want, so earning your salary might be a use case that we see picking up a little bit more, can deposit directly into that. There's no need to communicate with any of Immersive's infrastructure, including APIs, if you want to withdraw those funds. So you're in complete control of your assets at all times. Similarly, when we do a transaction, we actually process that transaction really rapidly on chain, debiting funds out of that smart wallet, that individual on-chain bank account for the users. So we think that's pretty impressive. There's no need for us to publish things like miracle proofs, which we do on other ones for doomsday type scenarios. So highly decentralized, really good user experience, and able to do something on an L1, which for the most part, a lot of the other sort of cards and products out there, are running on L2s, which isn't quite as elegant, and you need to bridge assets and that type of thing, which I don't think a lot of users want to bridge their assets. They want to spend on the chain that their assets are already on in a nice, easy, frictionless kind of way.
Awesome. Yeah. And Joseph, I'd love your take on it. Same question. Just if you could maybe explain kind of some of the benefits that Algorand offers up in solutions like this, and why you think, you'll see more and more traction.
Yeah, so Jerome did a very great job explaining a lot of it. But I just want to go into a little bit of how the smart contract setup works, because it's one of those things that Algorand, it's unique about it. So essentially, you have one smart contract, and think of it like the queen bee, and then it is able to generate a bunch of accounts underneath it that get controlled by that one smart contract. So this allows for every user to have their own individual deposit address that they can track and manage. So with other chains, it's usually nested inside a smart contract, or the users don't have, they have to abstract their funds to a different chain. So having this unique rekey structure with the way that our smart contracts are programmed allows us to have things like the global state of the contract. We can read the on-chain balance. It's so much more efficient from not only a user experience perspective, because one wallet is one user type of thing. But if you're looking to understand how this contract's working, everything is all in one place. And that's one of the things about Algorand that I really enjoy, because it breaks things down, and all the objects on it are layer one. So it's very simple for a user to understand what's happening, even if they don't understand blockchain.
Yeah, I mean, it's huge. And I think too, instant finality. And, I guess one of the questions that I have is as we broaden it out a little bit, is what is your guys' take on kind of the state of stablecoin adoption and what it potentially, kind of represents? It seems like, even from an outsider looking into the state of where blockchain's at, it's not an app, but I want to say stablecoins almost look like they could represent the killer app, as far as actually being used, because at the end of the day, you're not necessarily asking people to do anything that they wouldn't normally do. But just your guys' kind of broad take on where stablecoins are at, as far as the industry is concerned, and maybe I'll start with Jerome there.
Yeah, look, I mean, cash/paper money was kind of innovative 1,000 years ago when it first came out, and a lot of people still like cash, right? Look at COVID as a classic example. Look at people in Latin America with what happened with the banking system and their funds that they had entrusted into a third party. Similarly, look at what happened with the FTX voyages of the world, right? People like to be in control of their money. The challenge is that cash can't be used on computers, right? And devices, internet, it's the way we all live and operate now. So money that's made by machines to work on machines, natively on machines, whilst still having that control, has a lot of real world applications and use cases. I can send value to someone instantly without having to trust a third party, without having to pay fees and without having to wait 2 to 3 days and not even knowing whether or not it made it to the other end, right? Unless I give them a call and they could say, yes, it did, or no, it didn't. I have to trust them on that front, right? So for me, I think the future of the physical wallet is going to be the Web3 wallet. We're not going to have these leather things that we, I mean, I've still got one of those old leather wallets with a money clip in there. It's just for show. I don't use the cash anywhere. I can't even use the cash in most places, right? People are now no cash. It used to be no card. Now it's no cash. So if I can have the benefits of that digital cash and I can spend it online on a payment terminal for my Netflix subscription, I can send it to anyone instantly. I think it's going to be huge. It's interesting as well if you look at it from a political perspective. The USD is obviously the global reserve. There's a bit of a battleground going on between different currencies and between different stables, because I think all the governments realize that that's the future of money, and hence you're seeing new legislation, new regulation to support and promote stable coins. And I think the other thing that we need to be aware of is this is very much still day one. The future of money is smart money. It's programmable money. It's money that knows where it is, where it's been, where it's allowed to go. At the moment, globally, we spend $100 in compliance regulation to save $1 of nefarious activity. It's a massive cost on the system. We have to pay these fees and build them into our commercial model. But the money might, at some point in the future, know that if this person's being KYC'd and that person's being KYC'd, and I can validate the source of funds, then I can send 11,000, 11 million. The network can actually codify compliance into it itself. The currency can have compliance codified into it itself. Tax can be codified into there. So when I'm paying at a retailer, maybe X% goes that directly to the tax department, that type of thing. So smart money, programmable money, all of these things are going to be built on the back of stable coins. So I'm very bullish on it. I think it's very early days and there's a lot more to come.
Yeah, you bring up a really interesting point. I think about the user experience right now that a lot of people just kind of don't even, it's almost like the status quo, and we just deal with the status quo. Like you go to the gas station and try to go and use the terminal, and the fees that are inclusive in that payment that isn't even a settlement, and it's like even these merchants have to drive prices up for different things depending on how you pay. And I think that competition in that regard is a good thing, and it's going to be good for kind of the end user and the consumer at the end of the day. Joseph, I saw an interesting report, and I'm not going to go too off the rails here, but like a few weeks ago, I found from the TBAC, it's the Treasury Borrowing and Advisory Committee in the U.S., and they put out a report to the Treasury, and some of the members that sit on the TBAC are like JP Morgan and BlackRock and kind of all these heavy-hitting entities, estimating that if all goes well, as far as clarity is concerned, we could see like $3 trillion stablecoin market cap by 2028, which I think is pretty wild. I guess where I'm going with this question is, over the past 12 to 18 months, we kind of see this. How do we the account abstraction stuff to make user experience better for onboarding into blockchain? I think that stablecoins are almost like an abstraction method for getting people used to like new technology in a way. And I think it's going to kind of just happen where once stable coins are kind of integrated, it's going to be much easier for people to maybe explore other areas and get used to the tech. But do you kind of agree with that, Joseph, or just maybe broader thoughts on that? And we don't have to go too far down the rabbit hole.
I personally think it's going to be more than that, just because like Jerome touched on the political points, but we've seen the MiCA compliance in Europe and how they're working with your stablecoins there. We see the House and the Senate working together for a stablecoin backed bill. So I just think that as these legislation continues to pass, there'll just be more and more. Speaking of BlackRock, they just recently launched a T-bill on Algorand, where we could go and buy digitized T-bills, and it's the United States Treasury dollar. So it's just more compounding of different types of stable coins, and it's really cool to see. And I agree with you too, and especially too with so one area that we're really looking into is agentic commerce for our AI agents talking to each other, and this money on the blockchain is programmable. So people finally have the ability to, have AI or just have scripts manage their money for them. And it's something that the traditional finance system really can't offer them. So having more of these use cases arise and seeing more people like take advantage of this accessibility that blockchain rails provide for them, I think stablecoins will just start lifting up from there and then just get to a point where it's like, how come we didn't do this earlier?
I think when you bring up agentic AI too, how important it's going to be as these systems actually get integrated, to be able to actually have atomic transactions and to be able to actually, you think about like some of the things that occur within, and nothing against Ethereum, but like imagine agentic AI running through Ethereum, and you're not able to tell what the gas fees are, and you're trying to automate systems and do all sorts of stuff. Like you need to have stuff fast. It needs to be predictable. It needs to be extremely cheap for this stuff to truly get integrated. It kind of leads me into, how the Pera Immersive card differs a little bit from existing Web3 cards like, Coinbase or crypto.com. What are some of the advantages of the Pera Immersive Mastercard differentiators and a competitive advantage, I guess I'll go with. And Jerome, maybe I'll let you kind of take it from there.
Look, I think the big one compared to those cards, at least, is around the decentralized nature of the card. So with those other cards, you need to trust a third party with your assets, and that they'll do the right thing. And those are good brands, by the way. So I don't have anything against that. But some people, like to be in control of their money. So with this sort of card, you are the master of your money, and you're in complete control. I think also, if I look at the user experience, the way this is being developed by both parties is very much in line with Web3, right? So instead of a username and password, as an example, you create your on-chain bank account by signing a message with your Pera wallet. The user experience for onboarding is far more elegant. We've really optimized that so that there's minimal effort on the user's end to get up and running, and just minor things. For example, you don't need to enter your date of birth, and even name, actually you don't need to enter. And the reason for that is we get that off the driver's license or other document. You don't need to upload a utility bill, which is always a bit annoying, particularly if you're on the road or on the run and trying to do something on your device, because we've integrated real time with data stores where people can just enter in their address, and we talk directly to verifiable data stores to confirm that, yes, this person has signed up for power or phone or similar at this particular address. So you've got a really slick user experience. I think to create a Pera card or create a Pera account, it's less than 5 seconds. To go through the onboarding process end to end, which is full enhanced due diligence, it's less than 60 seconds. And then everything is done the Web3 way. No username, no password, sign a message, and away you go.
Yeah, Joseph, I'd love if you could maybe expand a little bit on the onboarding experience, what that looks like right now, and then what that may look like kind of in the future.
Yeah, so it's as Jerome said, it's very simplistic. So essentially all you do is you connect your wallet, then you sign one transaction that initiates a smart contract to say, hey, I want to create a card account. And then you just sign a second transaction that just says, hey, finalize this wallet to my account, and it just merges everything together. And then from there on out, like the smart contract knows that this is the wallet that controls this account. So whenever you want to withdraw or deposit, it's all done decentralized. And the best thing is too, and like if anything was to happen, like let's say Immersive's API was to go down or something like that, users can still call on that smart contract and be able to withdraw their funds without everything needing to be in place, because we did it in such a decentralized nature. So I think that's another advantage of building on Algorand. And the best thing, in my opinion, is like other cards, they charge deposit fees. Since we're using the straight up network, there is no deposit fees that's needed. It's just the simple like 0.01 Algorand that you send for gas. So there's it's so much cheaper, it's so much more efficient, and it's just, in my opinion, a better way to manage your money.
This is more of a curiosity question on my end, Joseph, and it's like, all of these different networks and Algorands, certainly there's just continued innovation in this space, and like as more let's say things within the product suite of the network become available, like, are you kind of looking for synergy into like, hey, could we potentially integrate something like this into the Pera Immersve, card at some point? I don't know if there's any like definitive examples of that. I just know how much innovation is consistently occurring. And are you kind of looking for overlap into, a product like this?
Ideally, yeah. So, we're trying to figure out. So, people have USDC in other parts of Algorand. So, like for us, it's about exploring partnerships where people can potentially, have money in a lending program, and then the yield gets deposited into the card. Integrations like that, or obviously, the most requested thing this requires, a new partner or something like that, would be to have, your paycheck gets paid and USDC is bought and it's deposited into your account. So we're really trying, like the main thing is increasing the rails for people to be able to take their USD and convert it into USDC or whatever currency they have, and really getting a more streamlined response. So that way the process of getting USDC and getting it onto your card is a lot more of a direct process than more of the circumnavigation that you have to do today.
Yeah, and I'd love if you could maybe expand a little bit. I know that the ecosystem has just tons of initiatives on a consistent basis, but how do initiatives like this kind of serve as proving points for the technology within Algorand? And in that vein, how does this initiative fit into the larger kind of Algorand ecosystem growth?
Yeah, so just in general, we're really trying to push the decentralization nature of the chain. That's why this integration, it was more novel, and it was the first time we've done something like this. But what it really did was it just proved that, with better technology, you can build better products. So it's not always like the shortest road for us, but it's about staying true to our values. And one of the values is decentralization. Like, for example, we're pushing out our peer-to-peer network update, which will make the network more decentralized by default. The foundation has been reducing their stake in consensus, and they're looking to get it under 20%, which is another way that we're trying to enhance the ethos and, just reduce the reliance of the Algorand Foundation in general. So I think by having this feature developed and designed in such a decentralized manner, it not only like encapsulates like what we're trying to do as the foundation, but it also showcases Algorand's finality, Algorand's lowest fees, and just all the other perks that come with like how to develop a smart contract on Algorand and everything that goes from there. So it's a twofold, but we're really trying to be a thought leader in the industry of showing how things can be done better.
What's been the response so far from users? I know that I have to correct myself if I'm wrong here, but this is live in I think a handful of jurisdictions, initially in the UK, Germany, Spain, Italy, and New Zealand. But what has been the response like so far? What are you guys kind of both excited about for the future? Where do you see kind of this going, I guess? I'll start with maybe Jerome. We've skipped you for a few questions here.
Cool. I think Joseph's got a better handle on the actual numbers and metrics. But for me, I think the next revolute, the next major innovation is going to be built on chain for sure, where it comes to financial services, because of things like stablecoins, programmatically, compliance as a service, that type of thing. The Web3, cool. All right, thanks, mate. The other thing I think is that the banking app of the future is definitely going to be the Web3 wallet, right? So the Web3 wallet, like Joseph was alluding to before, you're going to get paid yourself. Well, why do you have a bank account? I guess let's take a step back. So you have a bank account for a couple of reasons. One major one is, for the most part, that's where employers pay money into. For the second part is because that's where you go to borrow money. Now, as soon as employers start paying on-chain using stables and potentially paying on an hourly basis, oh, thank you. I'm sorry, my kids are just getting.
You're good. I have 3.
Yeah. As soon as you start getting paid on chain, and I don't think it's going to be monthly or even fortnightly or weekly. Why can't you get paid daily, even hourly? Streaming your salary or getting paid on outcomes, programmatic again, smart contracts, AI agentic, all that kind of stuff could happen. Then when you start accruing assets, whether it's Bitcoin or other assets on chain, and you can borrow against those assets. Maybe I could borrow against some assets, or maybe there's other ways that I'm going to be able to borrow on chain as well, whether it's crowd crowd type sourcing. I think you got Figure out there doing some pretty innovative stuff. So, okay, I can borrow on chain, I can get paid on chain. Now I can potentially earn yield on chain. Maybe I want to lend out some of my money, some of my digital assets to get a yield on that. Then I can spend. You got, I think the number's like 1.7 billion people without a bank account. You might not need one in the future. So I think that's where I kind of see the future heading for all of this stuff.
100%. And I mean, even in that vein, like 1.7 people without a bank account, but how many people have a cell phone but don't have a bank account? Like, it's going to be really interesting to watch kind of how all this stuff takes off. I mean, Joseph, I would love if you could touch base briefly on who is kind of the target user right now. Like, we've talked a little bit about not necessarily having to have a lot of technical know-how to onboard. Who's your target user right now for this? And then where do you kind of see that going as well in the future?
Yes. So our current target audience are existing crypto users, because this is by far and away the best off-ramp experience you'll have in Web3. It's absolutely amazing. The first time I used the card, I was in the beta program, and I was in the supermarket. I tapped to pay, and I didn't have to wait like 48 hours for Coinbase to deposit my USDC back into my bank account if I wanted to spend that money. So being able to experience it firsthand, and understanding that, this is the future of off-ramping, and this is absolutely amazing. For the people that are currently on the chain, this is a great way to, spend your yield. Or if you don't want to dip into your savings, this is a great way to you made a 10x on your last meme coin and you want to sell some of that and buy something with it. It makes it super easy and super simple to be able to spend your crypto. And it just makes that connection between the Web3 world and the real world just that much smoother and closer together. And it's part of our overall effort to kind of abstract away the blockchain as much as possible. Like, for example, one of the more recent updates we did was on notifications. Instead of just saying you received 10 Algorand, we say you received 10 Algorand. We put the USD dollar around it. So we're really trying to show the dollar backing of these coins in order to promote that this stuff is real. It's not just some fake internet money out there somewhere.
I think so. What's great for me is you can imagine I do so many of these podcasts, and they're normally 45 minutes, an hour long, but I love the fact that this video is 9 seconds, or and it's literally just showing here's a phone, tap to pay, and that is it. And at the end of the day, where this technology is going, and I fervently believe this, is that not everybody, 98% of the people in the world aren't going to know how blockchain, distributed ledger technology, and crypto work. It's just going to be integrated into their daily lives, just like most people today don't know how TCP/IP works. So and how I can send you an email from my Gmail account to your Yahoo account. We're not sitting here being oh my God, interoperability. This is amazing. It just literally works. I'm able to email you. I would love, Joseph, if you could maybe walk us through a little bit too, where you guys are kind of working towards potential integrations, partnerships, on and off ramp solutions, things like that, to kind of make the experience either A, more seamless, or B, more widespread.
Yeah, of course. So it's great now that we're live. We did a bit of a slow rollout. It's in beta right now. We just wanted to make sure that the KYC process worked. We want to make sure the app works. People are transacting fine. The last month, I think we had over $10,000 in on-chain volume from the users that signed up, which was awesome to see considering we started halfway through the month. And so looking forward, we understood that through the process, there are a few areas that we can improve the user experience. And that's usually where we start focusing the most, because user experience is very important for us as an app in general. So one thing we noticed is people are creating a card, but not everybody's depositing with USDC. So is there ways that we can potentially make the deposit function better? So some things we're thinking of doing is having a swap built into the cards app, so people can swap whatever tokens they hold right to USDC. We're looking at a way to make it easier for people who are looking to on-ramp money to be able to directly send to their card wallet instead of sending to their main wallet. Since everything is decentralized on Algorand, you have the ability to do that, which is awesome. And other things we're doing is looking to get better notification support for people in available regions. We're making the card feature itself more prominent displayed in the app. Right now it's in a quick action menu, we're going to make it into like more, like you'll be able to see it a lot more, which we think is going to allow more people to see it and sign up and everything like that. So there's a few tweaks in there that we're doing, but we're also going to be starting incentives as well. So we have a few different like gamified ways that we plan on rewarding users who sign up for the cards who are spending. So the first thing we're going to be rolling out probably in like the next week or two, but we're calling it the lucky spend. So essentially you go out, use your card, and we're going to have some certain odds, and you buy something, and if you get lucky, we'll deposit a certain amount of USDC into your spending wallet. Other things we're looking to do in the future is, have limited time cash back periods, and also do like fund your first wallets for limited time, and just test out different techniques to see what sticks, what doesn't stick. So as we start rolling out to new regions, we're just in a way better spot than we were with these 5. So, but that it doesn't sound like we did anything bad on this one. It was a really good rollout. We had like no bugs. There was no user complaints. The people who had used the card had really enjoyed the experience, especially of being able to spend in real life and how smooth it was. Because as you saw with that video, when you pay for something, you don't have to open up Pera and sign a transaction. Everything just happens automatically. So the only time you need to really open up Pera with this is to load up your card. So, and those are just kind of the ways that we're looking at, like, getting people to integrate using these cards in their daily lives.
I think what's really interesting is like a lot of the examples that you share are like examples that we kind of deal with right now whenever we have, if you get a new credit card or if you get a new X, Y, and Z in the very traditional world, there's like, they almost like the merchants almost like, or not merchants, but the actual issuers almost like gamify it in a way where it's like, hey, you have this new saver card that gives you, 1%, cash back as for if you spend at a restaurant or whatever. If you spend X amount within the first month, here's a boost or whatever. So this is all like stuff that people already kind of see in the traditional world. What I think is interesting is like, not only from like the users, but we've seen 1,000% that like the banking entities and Visa and Mastercard, all of these entities are 1,000% kind of looking and figuring out where the overlaps are as far as adoption of Web3 and what they can potentially do with their consumers and how can they grow closer to their consumers as well. Maybe in broad strokes, Jerome, like, is that a correct assumption that like these entities out there are looking at ways to become closer to their consumers and leveraging the technology in a way that probably enables them to do so in ways that they might not even be able to do right now? Is that like, am I totally off base there, or is that kind of in alignment with what you see?
Look, I think there's a couple of things, right? One of the big challenges for a lot of for everyone in crypto actually, is the amount of people who have wallets relative to the amount of people who are active users is not where it needs to be, right? So there's different numbers out there, but let's say 562 million people have a crypto wallet. I would be surprised if 10% of those people interact with that wallet on a monthly basis. And I think what we're seeing now is a lot more metrics around daily basis. You want to move from a monthly active user to a daily active user. That's where we're getting to. People historically have had this perception, and maybe part of it has been real as well, that what do I do with this thing? Why do I buy this crypto? I don't understand it. I'm buying this kind of nebulous kind of thing that I don't really understand. And why? What can I do with it? And I think what you're going to see is more people are going to buy crypto if they know they can spend their crypto. Then if you look at the Web3 wallets and even the DeFi protocols and so on, if they can engage with users on a daily basis, it becomes the default app, the default banking app. What's my balance? Have I been paid? Or I spent this money, or I've won this reward, or I've got this yield back, all this type of stuff. It's all about driving that daily active user. So how do we go from sort of 10% of people that sign up for a crypto something to using it on a regular basis to 90%, or however high we go? Because I think that's one of the key things, is how do we increase the number of daily active users from the number of people that just sign up, do something, but then don't do anything again.
I think that falls in line with like the technology becoming a part of just ingrained into our everyday lives. Like, one of the things that's always interesting for me is like I look at, like, let's say micropayments as a use case, and it's not new to distributed ledger or blockchain, like seeing micropayments. Like, I can think 5, 6, 7 years ago of use cases that came out, but it seemed like it was just way too early. for something like that to take hold. And now with like the rise of what we're kind of seeing with stablecoins, it makes a lot more sense. And you think about this very attention driven economy that we just live in. Society is extremely attention driven. Like it's like what's capturing my eyes every 2 seconds. It becomes a lot easier to think of ways to integrate micropayments into people's attention spans and things like that. Because as you mentioned, and I agree with you, we're not going to be at this like, oh, you get paid, you know, every other week or once a month. Certain entities are going to start like probably streaming payments to people while they're like literally while they're working. I can imagine 20 or 30 years from now, it wouldn't be odd to see, you know, I don't have to wait 2 weeks for a paycheck because I worked 3 hours, 13 minutes and 37 seconds. And that is updating in real time. I think it's going to be pretty interesting to watch. I'll share this real quick. And Joseph, this is maybe for you. And I actually, as a sidebar here, and we'll ramp this down, I found this research. I've been doing like personal YouTube videos again with like deep dives and stuff. I found this research report and I didn't make a video a couple of days ago, but I found it before this tweet went out. And I also think it's super relevant where we use all these metrics and KPIs and blockchain and distributed ledger that I feel like are sometimes probably meaningless. And I think about, let's use just random network X as an example. And they claim they have crazy amounts of TVL, but then that doesn't take into account how much of that can't be moved, how much of that is from projects that are no longer here, and just all these metrics that are just out the window. And I think at the end of the day, as Jerome mentioned, and I agree with, it comes down to active users, who's actually using this in their everyday lives and what impact does that actually have. And Joseph, maybe just talk about this real quick and then we'll walk this out.
Yeah, so this was this report was actually commissioned because there was an event and one of the VCs had mentioned to somebody in the company that basically the price of the coin, they view it as correlated to the TVL of the chain. So this got like the juices flowing, like, you know, is this myth in the industry actually true? And so we have a new chief economist officer who wrote this paper, and he worked at SUNY Polytechnic. So he went through, he made all these experiments. And he created this thing and showed that there's no correlation between the chain's TVL and the token price. And it was an interesting way that for us to understand, like, is this myth or is this? It was kind of like Mythbusters, like the on-chain edition. But what's great about this is it gives us and the entire crypto community, you know, an academic paper that allows them to focus on the things that we believe are going to be affecting for a chain, which does come down to the number of active users that are currently using it. And we've been, as a whole, at this chain, we've been looking to integrate more into metric casing. Like we just recently had an integration with Nansen, and we show that, you know, Algorand, in terms of new generating addresses, we're one of the top chains in the month. So as we get more focus on what are the KPIs that actually matter, and as Algorand gets integrated into more data providers, it will start naturally showing like how much ahead of the game Algorand is compared to other chains once you start removing all the fluff that's associated with Web3.
No, I think it's going to be awesome I think we are going to see a shift from kind of this smoke and mirrors marketing that a lot of Web3 has kind of, you know, survived on, to, you know, put your money where your mouth is, basically what is actually being adopted and where are the adoptions pillars kind of at, and what's being used, I think is going to, like, the value of these networks. I think I want to kind of walk out here and get your guys' thoughts on what you're excited about for the future. I'm sure from Immersive standpoint, Jerome, you have tons of initiatives going on. So whether that be the initiative with Pera and the integration there and what you're excited about, or the broader spectrum or, you know, immersive initiatives, I'd love to hear your thoughts on what you're excited about for the future.
Yeah, I mean, for us, the thing with Web3 is it's hyper global, right? So our view is we need to be hyper global as well. And what we're doing is bridging this unregulated kind of Web3 world with this regulated financial system Mastercard world. So there's a reasonable level of complexity that we hide from the user, but we're a regulated entity. And so opening up new markets as a payment service provider, e-money institution, you know, we want to go into places like Africa, obviously wanting to launch into the USA, so we're progressing that. We've set up in Abu Dhabi to do stuff across the GCC region. We're looking to launch across Southeast Asia, you know, later this year. But the number one thing for us really from a strategic priority perspective is opening up new markets. So that's our big focus. The next thing that we're kind of really well known for is the user experience, and so I think there's some further optimizations we can make so that the user can get onboarded faster. They can have more control and value out of the card experience with the Web3 wallets. I think we're going to see a bunch more partnerships that we bring into play, potentially around loyalty, incentives, that type of thing. So yeah, that maybe support for more tokens is probably something else that we're seeing a bit of demand for. But yeah, very much the priority is on more markets, better user experience. And we're just going to stay true to that and keep it reasonably streamlined. Actually, one specific feature is at the moment for e-commerce, you get a 2FA by SMS. So we're going to enable people to sign for e-commerce transactions using their Pera wallet. So that's something that we've got on the roadmap in the short term, and we're looking forward to implementing that one. We think that's going to be quite a cool feature.
That's awesome. Thank you, Jerome. That's really cool. And it's always interesting for me to kind of have the opportunity to talk to people that kind of are at the intersection of kind of the traditional and the Web3, because at the end of the day, I really do think that that's where barriers are broken down and that's where adoption occurs. Joseph, same question to you. What you're excited about for the future of Pera, for the future of the Pera Immersve card, and just the broader landscape? That'd be great.
Yeah, so starting with the card, I'm really excited to take. I really take UI UX very seriously, so I'm excited to get some of these changes around depositing money into the cards. We have some unique ideas too for doing things like potential reoccurring payments of sorts. So we're going to try experimenting with novel techniques on the Algorand blockchain to try to get some of this stuff going. But in addition to that, at Pera as a whole, we recently have a new head of engineering who came from Exodus. So I'm really excited to start work with him and bring that experience into Pera. We're looking to get multi-sig wallets this year because we do want to be an enterprise-grade wallet solution. And we're working closely with the payments division at Algorand because, when you were talking about the micropayments earlier, we do believe that this is going to be one of the areas that's needed. And I think too, we look at micropayments, and one of the most successful implementations was the Reddit tipping with Doge and getting that going. So being able to do that on a highly efficient network, I think can really take micropayments to the next level. And we're really trying to focus in of how can we make, Algorand one of the best payment chains out there. So, becoming more integrated, and that will speak to also being more of an enterprise grade wallet as well. So being able to handle high transaction loads, being able to have multi-signature accounts on the wallet device, and just in general, I'm really excited. Just the way that the stablecoins are going, I think that it's just going to be a natural evolution of more people coming into Web3. And for me, it's about having a wallet that's ready for that crowd when they come.
Awesome. Well, I want to make sure to let people know, if you're interested in learning more about all the amazing work Immersve is doing, go to immersve.com. You can go to perawallet.app to learn more about the Pera wallet, which is Algorand's premier wallet. You can go to genfinity.io and read some of our really long articles that we write about all these adoption initiatives. Give Pera Wallet a follow on X at Pera Algo Wallet. Give Immersve a follow on X at Immersve. Huge shout out to the Algorand Foundation for helping to put these podcasts together at algorand.co and at Algo Foundation. Jerome and Joseph, thank you, gentlemen, so much for bearing with me for about 45 minutes today. Let's definitely do this again as more integrations start getting, start coming into the mix here with the card. I'd love to bring you guys back on. Jerome, as you have more real world expansion and everything else, I would love to highlight some of that as well. And it's always great to talk to you, Joseph, from Pera Wallet. So bear with me for a second, guys. I'm going to ramp this down and make sure I get the recording. So hang out for 1 second.